Welcome to Institutional FX Uncensored, your free weekly FX podcast. Listen to professional FX traders, currency hedge funds, and FX brokers from around the globe discussing the latest FX news, trends, and regulations. Be ready to navigate through the uncharted waters of the foreign exchange market like no one else has. Tune in.
Hi everyone, and we have a great episode for you today on a very hot topic. Welcome to the Institutional FX Uncensored podcast. I'm your host, Natallia, Hunik, and today we will discuss where to license your crypto company. My guest today is Praveen Kumar. Praveen is the founder and CEO of Belfrics Group. He has over 15 years of experience in financial markets with specific expertise in OTC and exchange-traded derivatives. He has served multiple financial institutions in India, the Middle East, and the Far East, and has provided liquidity solutions to various exchanges. Welcome to the pod, Praveen.
Thank you so much, Natallia. Thanks for having me in this program.
Thank you. All right, so let's start maybe with talking a little bit about yourself. You and I go way back to the times when you were running FX business. Now you run Belfrics, which is the crypto exchange. Recently, the wires crossed the street that the exchange has been acquired by U.S. publicly listed company. Can you share a little bit of a detail about the company and perhaps, what you can disclose about the transaction? Because I'm sure a lot of listeners who are either contemplating building a crypto business or perhaps already have one and looking to exit would be curious to know a little bit of details that you can disclose.
Yes.
If you could.
Yeah, for sure. As you rightly said, I have been in the money markets for quite a long time. In fact, I started when it was offline. So I saw the evolution from the offline to the online market. So in 2014, I ventured into the crypto business. I bought my first cryptocurrency when Bitcoin was $27. So from then onwards, I never looked back. So I thought that
Wow.
this is the right opportunity for us. So we started Belfrics in 2014, and our first exchange went live 2015 from Singapore. So as of now, we operate in 8 different countries, exchanges. We went into these countries by ourselves. So if someone is looking to start a crypto exchange, definitely they can be inspired with this. Without any external funding, we had reached to that level. So recently, yes, we have been acquired by LifeClips, which is a US listed entity. So that definitely gives us the muscle power for us to expand further and to go to the next level.
That's great. That's great. Do you mind me asking? Since you've been in FX, how do you see the difference between, the markets in general? Obviously, perhaps FX is more mature, but also about the traders. Are those the same people that trade FX? What do you see? What do you think?
There's a stark difference in terms of how traders approach to these instruments. Earlier it was very uninformed kind of a process, wherein which they completely rely on brokers and also the money managers. But now that's not the case. You have artificial intelligence, you have bots available, and you have various information at the tip of the fingertip, for you to take an informed decision, right? So now they are maturing slow and steadily with the help of with the technology that is available. So a lot of evolution has happened during this particular period. Even the approach also, traders are more cautious in the way in which how they are trading. Previously, it was purely speculative in nature, and they didn't know what they were doing. But now that's not the case. It's more. I should say that right now an FX investment has become part of their portfolio itself. Previously it was very speculative and very short term, but that's not the case right now. People have slow and steadily started having their long-term approach also onto the FX investments. So
right.
It is evolving.
Right, it's evolving, and as you mentioned, that people are venturing out and to actually trade in crypto as an asset class. I think there is a new generation of fund managers that is evolving that are crypto fund managers. And we've been seeing, I've been asked a lot about starting the crypto fund, and it's interesting enough, PwC, PricewaterhouseCoopers, came out with a dedicated report on crypto hedge funds. And based on their research, they indicated that the total assets under management for the hedge fund crypto industry is about 3.8 billion. Which is a significant increase from 2020, for example, when it was 2 billion. While it's kind of a small number in comparison to the total size of the hedge fund industry, which is currently sitting at 4 trillion, so that's like less than 1%, but it clearly indicates, the growth numbers clearly indicating that there is an upsurge of interest in crypto trading, and people are looking to set up their crypto funds. Seems like a huge potential. I don't know if you're involved in any crypto hedge fund management, but what are your thoughts on this, and what are your thoughts on these numbers? I mean, do you think there's a way to go?
Yeah, massive space. In fact, what I should say is that the crypto asset class that is going to outperform any other asset class, at least in the near foreseeable future. It has happened in the past few years, and I expect that to continue for the near future. There's no doubt that it is volatile, but the leading blockchains, they will keep maturing over a period of time, and the fund managers, or rather I should say that the analysts, they will be able to analyze these blockchains based on the real businesses. So as and when it matures, from the revenue, from the size of the technology, so you will be able to classify that which is the asset class that which is the crypto asset that you need to invest, and how strong that particular base is. So it'll take some time for sure, especially when it comes to crypto fund managers as compared to any other asset class. They need to be more informed. It's not just about the financial dynamics that they need to look into. They need to understand the technology itself. It's quite complex in nature, and it keeps evolving on a day-to-day basis. So understanding of this technology is very important for them to make an effective decision. So it's going to be volatile for sure. Any asset class, when it comes to the market initially, definitely that's going to be highly volatile. But here, the added complication over here is that it's filled with technology, and it's an inside-out technology. So today, whatever that you see over here can be easily copied, and you can actually improvise it. So that's pretty good in the market. But from a fund manager per se, you decide to invest in one particular technology at this point in time, by tomorrow you have a better technology coming up. So it's going to be tough for them.
Right. And speaking about the crypto and regulation, which is another huge topic when you're talking about crypto. And you mentioned when you started back in 2014 in the industry, you started with Singapore. According to the same PricewaterhouseCoopers report that I was looking at preparing for this podcast, it does appear that what they cite as one of the most popular domiciles for the crypto hedge funds is kind of same jurisdictions as I see for just generally crypto, not crypto, just regular hedge funds, like Cayman Islands, US, Gibraltar, BVI, Luxembourg. I know you mentioned you started in Singapore. Is there any other jurisdictions that you would like to point out where the regulator does an excellent job attempting to regulate? I don't think anyone has yet established a very developed regulatory framework because it's so new, but perhaps some regulators are ahead of others when they're trying to regulate this asset class.
Yes, similar to how it's going to be complex for the fund managers, it is equally complex for even the regulators also. The market is evolving, and custody of the assets are pretty distributed, and there is no borders available in regards to where those custodies are being held. So it's a very complex form, right? So the regulators are coming up with these innovative ideas of sandbox licenses. So many regions have come up with these kind of license. So if you want to go ahead and do it in Bahrain, you have the solutions available. So rather than a very, what I should say, very fixed framework. So these regulators are evolving right now. So you can approach a regulator and you can come up with your idea. So they will be providing you a trial licenses wherein which you can demonstrate that whether you are able to comply with the required norms what the regulators are looking at. So Dubai, definitely the UAE, where I'm sitting over right now, is fantastically good. In fact, multiple free zones are coming up with their terms and conditions for setting up the fund. So you are free to discuss with the regulators and to take it up further. Malaysia is another region. I should say that they are one of the early adopters. Many people might not know about this. Labuan Financial Services is a pretty good jurisdiction, or rather regulation to look into. They have a specific guidelines for digital assets. So be it an exchange, be it fund management, or even for a token issuances also. So you can actually look into that one. Estonia is again another European region which we can refer to. And if you are from the CIS region, even Belarus is also coming up. And you have the central banks. I should say that as compared to the Western region, the region from the Asia and Asia Pacific region, the regulators have taken a step forward. You have the Central Bank of Philippines regulating the crypto exchange. You have the Central Bank of Thailand regulating the crypto exchange, and the Malaysia, as I said, it's already there. Singapore, they have a very flexible framework, so they will take their own time to come up with the regulation. But as of now, you can do an informed business over there. So all these regulations are regions are available. But why you see the funds more spread out in US and Cayman Islands is basically because of the usual flexibility that is available with innovative products. So that's how you see that. So you will be seeing a little bit of spreading out of funds to other regions, but still US and Cayman Islands and those regions would dominate in terms of the AUM.
Right. It's interesting, Praveen, that you mentioned, few places in Asia and Asia Pacific. And when you speak in specifically about those regulators in those countries, you mentioned the sandbox, but do they establish a separate regulatory body to deal with the crypto digital assets, or is it sort of a department within the, like a financial conduct authority equivalent, someone who regulates financial markets already?
Yeah, it's the same department, but it depends upon how they classify the digital assets. So if it is classified as money, then usually that will be taken care by the central bank. And if it is classified as assets, so this goes to the Security Commission. So in fact, every regulator, they have a specific division that is dedicated for digital assets. So I don't think so that there's any regulator that won't be having a department for this one. So it's the same department. So they come up with a framework. So before implementing a full license solution, they let's say, for example, if they have to implement a full banking requirement for a digital asset exchange, so that will be too much of a burden for companies like us who are startup entities, right? So they don't want to put too much of burden, but yet they don't want to relax it to such an extent wherein which that can be trouble for them to regulate. So that's why they come up with this in between process of not implementing too much of restrictions on you, but yet you can demonstrate them that this is how I will be doing it. So it's a pretty good one. In fact, we were the first company to be awarded a sandbox license in Bahrain. Even in entire Africa also, we are the first company to be awarded for a KYC compliance process using the blockchain in Kenya.
Right, and it's interesting that you mentioned those jurisdictions. From your point of view, I know you first set up in Singapore. If you look at that region, what do you think is the most cost-effective solution in terms of jurisdiction? And also, I think even more important, in order to conduct this business, you still need to be able to plug into the traditional financial system, right? Like you still need the bank account, and depending on where you go, might not be available or might be harder to get. So from taking that into account as well, like what are the jurisdictions that you would say not only friendly to digital assets but also provide that very good coverage, intertwined with the global financial system?
Yeah, it depends upon which region that you're targeting. It's we should not be generalizing the jurisdictions based on the cost factor, but which region that you're targeting. For example, if your target is regional exchanges like India with a 1 billion population, and in African regions where in which 50 million population is there in each country. So there, going for an offshore licenses won't be effective. So you need to go with the local licenses. So you need to coordinate with the local regulators, because each of these exchanges can be compared to digital bank, right? So your requirements are going to be on the higher side. Now, if you are going to target the global audience, there are so many options that are available right now. So as Sonia, if you're looking into European region, that's one good region that you can look into. Now, BaFin, the German one, is a pretty good license. In fact, I would say that among the European region, BaFin is the one which has come up with a comprehensive detailed licensing process for be it fund management, be it custody, or be it exchange. They have a complete detailed license process available. So slow and steadily, other European regions also will take it up further. So there are the Malaysian Labuan license is a pretty good one. If you are looking at targeting the Asia Pacific region, that's a pretty good license available. So it depends upon which region that you are targeting. Accordingly, you can take it up further. So there are cost effective and cost intensive licenses also there. For example, if you come into Dubai region, definitely the cost is going to be on the higher rate, but you have the entire Middle East market to tap into. So it depends upon how you want to.
Right. Yeah, it's interesting that you say, start with, I mean, in generally, like, I think, most of the hedge funds or even the crypto exchanges will start, let's say like Coinbase, their customer base in the US, they'll start with working with US regulators. So it does seem like, most of the crypto exchanges kind of follow that path. And even if, they want to target the country that doesn't have necessarily a well-established regulatory environment for digital assets, they'll work with the regulator. And it seems like that's what you were doing when you're trying to tap into those, new markets.
Absolutely, and you mentioned about integrating with the traditional entities, right? Especially the banks. Getting a license is much easier than getting a bank account. So that in FX market it's already difficult for the FX broker to get a bank account. So crypto is even difficult also. So if you want to establish a banking relationship, the foremost thing that what I would suggest everyone would be to acquire a license. The region where you're operating, and you be present over there. So in FX region, mostly like you're all very domiciled entities, right? So you operate from the respective regions and you have your presence over there. But many of the FX brokers, they are very much virtual in nature and they operate, right? The white labels and all I'm talking about. So in the crypto market, this might not work well. So they have to be domiciled in a specific region so that banking would be much easier. So banks, they have their own rules and regulations when it comes to crypto, so they don't like it too much. Predominantly because they don't understand it. Now slow and steadily they are coming onto that. But once the license is there in the respective jurisdiction, they take an informed or rather calculated risk of serving the respective exchanges. So you will see that wherever the licenses are there, they don't have much of an issue in getting the bank account. So for example, for us in Malaysia, we don't have any issues. So maybe it goes in the similar way. Coinbase in US, no issues for them to have the bank account.
Right. They had in the beginning, there's a long debate about banking. And of course, banks at first, they didn't know what it is, as you said. So, they didn't want to take the risk. But, as the regulatory framework was evolving and now they're feeling more comfortable and you have appropriate licenses, actually, even the ones who were against the business are now turning to the other side, so to speak. And we see a lot of banks doing that than traditional financial institutions, because I don't think that's something that you can avoid at this point.
Right. Over a period of time, they will come to terms with the exchanges.
Right. So Praveen, I wanted to ask you, what do you think are the top 3 things for the new crypto fund managers to consider when they're starting out their new crypto fund? I mean, we just extensively talked about jurisdictions. Is there anything else that you would advise them to really be thinking about?
Yeah. The first and foremost region is that, which region that they are targeting. So based on that, they should look in for the license. So there's no point of going for a Cayman Island license if your target market is African region, and if your fund size is smaller, then accordingly you don't have to increase your cost factor for that particular process. So you can go for smaller offshore jurisdictions also. And being regulated is definitely a very pretty important factor. And also the point that what you mentioned about having a banking relationship. So there's no point of having a license and not having a banking relationship. So you need to first look into that particular factor, whether the banks in those regions are supporting the crypto related activities. So the license, the region, and the banking relationship. So these three are the most major factors. And also, as long as the regulator is regulating a crypto related fund management process, they they will be well informed about the processes. So it doesn't matter what type of regulator that you are getting regulated with, as long as the license is there, based on the region that they want to target, they can go ahead. So these three are will be the major pointer that they need to look into.
Great. And for the crypto funds, I mean, we already discussed in the beginning that it's such a volatile set of instruments. However, people are learning to trade it despite the volatility. I mean, we see the Bitcoin even now. I mean, intraday I keep getting alerts, up down 10%, within a few hours. Do you think Bitcoin is still the major traded cryptocurrency? Or, I mean, and you run the exchange, so do you see any other, perhaps digital assets thriving and Bitcoin declining, given also the price point of it?
Yeah, if your question is in regards to the fund management per se, the hedge funds and all, so almost I should say the 90-95% of the trades happen only on the Bitcoin funds. I mean the Bitcoin currency. So the Bitcoin, Ethereum, Ripple, to an extent even Litecoin. So they all form the most major weightage for their fund management. So especially when it comes to Bitcoin, you know that the liquidity is massive. And also it has that true advantage of being a currency and also as a hedge instrument. So when it comes to Ethereum, Litecoin and all, we still see those as technologies, utilities and technologies, right? So they don't have that currency status. So that's why most major hedge funds, they go into Bitcoin first. If when it comes to the crypto exchanges, yes, again, we all have majority of our volume in Bitcoin, and then it goes to Ethereum, and then it goes to rest of the altcoins. But once in a while, it keeps changing. For example, when there is a tweet from Elon Musk for Doge, so then the Doge volume increases considerably.
A lot of manipulation going on.
Absolutely. So once in a while, yes, you will see a topple down of the volume to other currencies based on how the market sees it. But overall, Bitcoin rules at this point in time in terms of volume.
And what are your thoughts on stablecoin? I mean, I've heard from multiple sources that they do have a big use case, particularly in the Asia Pacific region.
Yes, there are multiple stable coins that are available in this region, but USDT rules over here. So there are a lot of controversies with that particular stable coin, but still, since it carries privacy advantage and also anonymity is there, so the particular currency is, I should say that it's used for both the laundering purpose and also for the legitimate trade. So that's why you see a lot of interest on this particular token. There are other stable coins also, which are well regulated, like USDC, and many other stable coins are there. But you will see still most of the volumes revolves around USDT.
So, right, very controversial stable coin that is.
Absolutely.
Yeah, I think I've just heard yesterday that because they're supposedly backing up their reserves with commercial paper. A lot of that commercial paper might be resided in China, and there's ongoing issue with Greendale, one of the real estate giants in mainland China, that could have potential detrimental effects to the Federal Reserve. It's all speculation. There's so much of it in the market. Yeah, I guess it kind of goes to the point why hedge funds still pretty much focus 95% on Bitcoin, rather than other alternatives.
Very much controversial, because even their disclosures are all from not well regulated regions. So as you rightly said, the non-cash components that what they are holding, so it's quite difficult to say that who is holding, how it is being held. So Bitcoin is much better safe for them as compared to, and definitely the value addition is not there, right? You holding it in USDT is not going to give you a value appreciation. So definitely it has to be other coins. So this is mainly used for transfer of fund purposes and to overcome the regulatory.
Moving money cross borders.
Yeah, you can say so.
Interesting. So Praveen, I know you also have a KYC solution or KYT solution. I wanted to touch upon that as well, because it's a completely new asset class and completely different. The way it's structured is completely different, and the way you receive the funds via digital assets is very different. And the KYC procedure that you need to implement when you're running a crypto business, whether it's crypto exchange or perhaps a crypto fund, is quite different. Can you tell our audience what are the major differences? And also, I wanted to, as a follow-up to that, I know a lot of US-based businesses, were forced to comply with US travel rule and do the KYC for any transaction over $3,000. And what's your view on it? Will the rest of the globe comply with that, or do they already start doing that? How do you think that's going to move forward?
Yes. So to answer the second question first, slow and steadily this compliance process is catching up in most of the places. Like for example, even in Dubai also, if you do a transaction above a certain limit, definitely the know your customer process comes in. And as you rightly said, from a financial services organization standpoint, you need to identify from where the money is coming in, right? And you, for the customers, you can accept the money from his account and you can send the money to his account only. So that is the norm for a regulated activity from a brokerage standpoint. But when it comes to crypto, I can send you a third-party crypto, and I can receive the crypto also from your entity to a third-party wallet. So this is one of the risks that currently persists, wherein which the identification of where the money is coming in from and where the money is going out. So this is one of the most major, what I should say, regulatory problem that everyone would face, and the technology is evolving. So our KYC process, that what we have done is that our Belgian blockchain is a combination of private and public blockchain. So on our blockchain, without you being identified, you cannot trade on the public blockchain. So each and every entity is identified in a decentralized manner on a private blockchain. So the advantage is that, for example, when someone from my exchange wants to trade, wants to open a brokerage account with advanced markets, so since I have already done the KYC for them, which resides on the user's wallet, he can simply transfer that particular claim to advanced markets, and you can onboard that particular customer right then and there itself. Not only that, assuming that we both are like one of your customer is moving some fund to my exchange or from my exchange, the deposit is coming to advanced markets for FX trading. So I will be able to send the information of the sender with his consent directly to you. So by complying with the GDPR requirement and the PSD2 requirement, so we are able to comply the process of you identifying the origin of the funds and be able to transfer this KYC process of my client with his consent to you. So this is a decentralized process of KYC management. So this is an evolution from the current model of each institution doing the KYC again and again, again and again. So here the user can be at his control of to whom you want to share. So that's how our KYC model is being built upon.
Right, which is interesting, the fact that you can transfer KYC, right? I mean, every time a client opens an account, even at the same group but different legal entity, that you have to pass the KYC process, completely new. But drilling down on the KYT, the know your transaction, and identifying the source of funds, I understand this is the major challenge when you are dealing with crypto transactions, right? So how do you identify where the funds are coming from, right? Like, what if there's multiple layering involved? What if they move the funds across multiple exchanges, trying to mask the origin of it? How do you combat that issue?
Okay, so one of the advantages of the blockchain process is that wherever the fund is moving, at least you are able to trace from where it is
Mhm.
coming. So the one piece of puzzle that is missing is that who that wallet owner is. So that's where the missing part is there, right? So we are able to identify the trail now. A lot of technologies have come up with a solution of transaction identification. So tainted wallets, the wallets which have been involved in a terrorist activity or whichever activity. So similar to how we maintain an OFAC file, so even on the blockchain process also we are maintaining these, not we, like in general, the industry is maintaining these kind of identification of the wallet, so we can use that service coupled with the service that what we have. So what we do is that whether you hold a Bitcoin wallet or an Ethereum wallet, whichever the wallet it is, since you are identified on the Belgium blockchain, we write a transaction of all your cryptocurrencies onto a single transaction on my blockchain. So on the Belgium, once Natallia is identified, so you can identify yourself and your wallets of Bitcoin or whichever the currency it is. So now when you want to transact with Praveen in another exchange, we will be able to run a check whether this Bitcoin is associated with any KYC solution. So it identifies that this belongs to Natalia, then I can request for your KYC solution from whichever the exchange that is. Forget about the exchange. You are an individual person and you are doing a peer-to-peer transfer. Now, I can do a transaction directly to you by requesting a documentation process from you. And even that also you can directly transfer from you to us, which can be a KYC that is verified by advanced markets or verified by HSBC. So, I cannot rely on the confirmation that what you provided, but I can definitely rely on the KYC that has been done by advanced markets or any other entity. So you will be able to do a peer-to-peer transaction also by transferring the said claim which advanced market has given to the client.
Right, understood. So it's very interesting. So there's a database. Obviously, one thing to point out is there's a database of all the Bitcoin wallets that were ever suspected in some sort of illegitimate activity that every crypto firm can cross-reference. And the second takeaway from that is, I mean, obviously, when you are transacting on blockchain, especially the public blockchain, like whether it's a BTC or Ethereum, all your moves are publicly visible, then any company, the KYC provider can track, trace it backwards to where the money came from and cross-reference the wallet addresses against that global database.
Absolutely. It keeps growing because multiple entities are doing the same process. So as and when it is identified, since it's an open source process, so it's very easy for us to identify those tainted wallets. And from a regulatory standpoint, they get a much better control as compared to the previous transactions. Even when we do an audited report for our FX brokerage businesses, so most of the process relies on what I submit, right? What my accountant perceived to be right. But if we take up all these transactions onto the blockchain-based process, it's a complete inside-out process. So instead of doing a random auditing, they can actually do 100% on-the-go auditing also. So it's a great tool for the regulators. Only that they need to understand this particular process, and as and when these verification agencies come and they support the ecosystem, you're definitely going to have uh, an easy process to transact.
Right. It sounds like what I like about it is it's a much faster KYC process than what we have in the traditional finance. Everything is pretty much instant. Praveen, thank you so much. It's a great discussion. This is the last question. So, we've touched upon that in the beginning, that Belfrics got the outside funding from the US publicly listed institution. So what does the future hold for the company, for Belfrics Group? Like, what are your big plans for the future, for the next 5 years?
As of now, we are operating in 8 different countries, right? So we definitely will be increasing this number. Even the existing regions where we are, we work very closely with the regulators for framing the digital currency framework over there. So we work very closely with them. And as and when the license are finalized, definitely we will be one among the initial entities to be licensed over there. So we will push these processes in those regions. And European market, we are entering before the end of this year. So currently we are predominantly spread across Asia and African region. So in fact, in Africa, we are one of the largest exchange network currently available. So the Europe will be our next stop, and South America, we are already there in Mexico. We are crossing our license over there in Mexico. And few more countries are there which you will be hearing the news release pretty soon. And the next year, definitely we are entering the US market. So that will be our
Same here.
yeah, so we will be hitting the US market pretty soon.
That's great. Those are amazing global expansion plans, Praveen. Thank you so much for coming to the pod, and thank you so much for providing all this valuable information to our listeners. Do you want to share maybe a Twitter handle, or how do people find you?
Yeah, I'll share.
They wanted to ask more questions.
I'll share the handle with you. So I am available at Praveen at Belfrics.
Okay.
Yeah.
And we'll share that in the show notes as well.
Yeah, thank you so much, Natallia, and thanks Advanced Markets also for having me in the show.
Thank you so much, Praveen. Have a great rest of the day.
You too. Take care.
You too. Bye.
Any views or opinions presented on this podcast are solely those of the author and do not represent those of Advanced Markets. Trade in foreign exchange or other financial instruments on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or more of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from your broker or an independent financial advisor if you have any doubts. Anyone opening a live trading account needs to adhere to the laws of their local country, as such laws may differ from country to country. Advanced Markets expressly disclaims any liability for any lost principal or profits without limitation, which may arise directly or indirectly from the use of reliance on information provided through this podcast.